that are normally followed. Development of international financial reporting standards. So first of all, who makes these IFRSs that we are talking about here? So they are made by IASB. They are made by IASB like that. IASB. International Accounting Standards Board. International Accounting Standards Board. So then how do they develop these standards, ladies and gentlemen? To develop these standards here, they follow some procedure. The very first thing they will do, of course, they must identify a need. They must identify a need. I mean, they don't just develop standards anyhow. There must be a need. This need could be coming from, for example, accountants from a particular country, accountants in this case here globally, like for example, accountants in Kenya through ISPAC can easily petition the IASB board to develop a new standard. All right. So in this case here, they must identify a need. And once they have identified a need, then they will need to set what we call an agenda. Once they have been able to set this agenda, remember now this is a whole project by itself. Now we have developed an agenda that would want to produce a standard called IFRS 17, for example, which is amongst the new standards that were developed and became effective last year. All right. So there must be that agenda which has been set down. And this being a project, now they'll have like a project manager, a project team. So this project team, of course, now will be charged the responsibility of ensuring that within a stipulated time, we shall be able to have a new IFRS standard. So once this team sits down, there'll be a lot of preliminary research going around. Preliminary investigations, I mean. Why do we need, what is the gap? They have to do a gap analysis. So preliminary investigations, research have to be carried out. After that, ladies and gentlemen, we expect now that these people having gathered a lot of information from outside, they should be able to develop like a very initial draft. This initial draft is what we call a discussions paper. A discussions paper. So they develop a discussions paper, which in this case here, they publish and circulate amongst accountants globally. So how do they reach to all the accountants? Of course, in this case here, IASB members are the institutes of certified public accountants of various countries here, like ISPAC, right? Like we have the international, or rather the Institute of Certified Public Accountants of Uganda, Institute of Certified Public Accountants of Rwanda, Tanzania, etc. All these are states, all these are members of IASB. So then IASB will send to the institutes of these various countries this discussion paper. So that in this case, they can spur discussions here. I mean, this is what we expect in this insurance sector, for example. Most accountants will respond, all right? Now, once they respond, then this project team under IASB will sit down and then they'll be able to, in this case here, work out their discussions draft. They'll be able to work out their discussions draft, refine it. They shall be able to refine it. Once they refine it, again, they send this back to stakeholders through what now we call an exposure draft. An exposure draft. An ED. So this exposure draft is like a final. I mean, it is like now what they expect the final standard to look like. But they don't want to take chances. Remember, IFRS, preparation of IFRS, ladies and gentlemen, follows a lot of these things that we talk about here whenever we want to produce anything, for example, in Kenya here, all right, like a new constitution. There must be proper public participation. So IFRS, ladies and gentlemen, there is a lot of what here, public participations here. So exposure draft again goes out there. So the members in this case are able to discuss this exposure draft. Again, they take back their feedback, their reviews. back to ISB, who now in this case here are able to now look at the final details, then they are able to give us a new IFRS standard. Once they have given us this new IFRS standard, does it stop there? No, it doesn't stop there. We shall be having in this case here what we call monitoring and what here evaluate, monitoring and evaluation. Monitoring and evaluation. So of course, that's why they keep on tweaking standards, changing standards, because there is an ongoing monitor where they monitor how is this standard being applicable. There'll be so lots of trainings from them. They'll have to evaluate. Is this standard in this case here serving it is intended purpose like that? So there must be a monitoring and what year evaluation as this standard is being used, ladies and gentlemen. Yeah, so you can see in this case in summary, you can see here identify the need. All right. So recognition of issues or gaps in existing IFRS standards, often based on feedback from stakeholders or changes in the financial reporting environment. Then we have research and the preliminary work. Conduct initial research and analysis to understand the issues and the potential solutions. Formulate a project plan, including timelines and what year resources. That's part of the initial work. Then we have consultation and discussions. Issue a discussion paper to solicit feedback from stakeholders. Engage in public consultations to gather broad input on the proposed ideas and approaches. Develop proposals here. Develop proposals. Analyze feedback received from the discussion paper. Develop preliminary proposals for new or revised standards based on this feedback. Then we have number 5, exposure draft, very popular ED. Publish an exposure draft that details the proposed standard and invites further public comment. Analyze responses and adjust proposals as necessary. Again, there will be deliberations here. Review and deliberate on the comments received from the exposure draft. Make revisions to the proposals based on the feedback and further analysis. Then we have approval of the standard. Prepare the final draft of the IFRS standard. Submit the final draft to the ISB board for approval. All right. And then, of course, we have publication, publish the approved IFRS standard. Ensure the standard is widely disseminated and accessible to stakeholders. Implementation and support. Provide implementation guidance and support to help entities the new standard. Monitor the application of the standard and address any issues or challenges that arise. Feedback. The way normally there must be a need. Identify that need. And once you identify a need, then put up a project team. So the project team will be able to now come up with all that data. Timelines, etc. To start in this case here, they are work immediately. All right. So they start in this case here reaching out. All right. And then most importantly is that they have to give us a very initial document, what we are calling a discussions paper, what their thoughts are. And of course, the key, they must be having like the key partners. After they get, in this case here, this need, they must be able to share with this information with the key partners. They must be very few. We'll be able to give them like, this is what we think. So they call this one a deliberations, what year? September. Deliberations, they call this one a deliberations or a discussion, what year? Or a discussions what year? Paper. And once they've been able to have this discussions paper, then they send this out to the stakeholders globally. Remember, right now, IFRS, of course, IFRS has been endorsed by over 160 countries. All right. So in this case, if they send out that document, we shall be able to receive feedback here. This feedback is what we review and, of course, use it to refine our discussions paper now. And then what do we take outside there? Now we take outside there what we call what here? An exposure draft. Exposure draft is much refined. So exposure draft will be read outside there. It comes back. All right. We get lots of feedback. We review. After we review this feedback, then we make, in this case here, our final, we're going to call it final draft, or basically, we call it what here? We call it the new IFRS what year standard. We don't have to talk about the approval of the ISP. You know, that project team basically is within ISP. All right. Now, once we have these final standards, and gentlemen, what will follow is the concept of what you're now monitoring and reviews. So monitoring and reviews now has got all those other things here. All right. Like ensuring that there is a dissemination of this paper outside there, it's being followed outside there, in case there are any gaps again. This is normally an ongoing an ongoing process. So this is very, very popular. If you look at your past papers, this is really one of those questions that will always keep on recurring. That will keep on doing what recurring. Now, if you allow me, then I will be able to go straight away to the conceptual framework. The conceptual framework. So can somebody in this case here tell me, what is a conceptual framework? What is a conceptual framework? Anybody could be having an idea because you have heard of conceptual frameworks. You must have heard of conceptual frameworks since you started doing this CPA thing. Which basically is the base. Remember, a conceptual framework is the base that is normally used to develop IFRS. The base that is normally used to develop IFRS, as I'm looking for a past paper questions. Yeah. August 2023, question number 2C. August 2023, question number 2C. Once you get the question, could you kindly give me a thumbs up like slide? August 2023. My internet is unstable, I don't know why today it's misbehaving. I want to hear from you. What is that conceptual framework? Did has gotten it? Great. Thank you so much. Have you shared it, Jerry, in our group? This is a topic that you can't miss a question. Whether you like it or not, we shall always have questions from this area. All right. So I suppose now everybody has been able to get it. Then I should be able to straight away be on top of things. Ladies and gentlemen, a conceptual framework from the word concept. Concept. We can't develop an IFRS standard without a conceptual framework. So basically, a conceptual framework gives us the rules. The rules in this case here that underpin the development of these IFRSs. The policies that we have to follow whenever we are coming up with what here, with an IFRS, with any IFRS. Ladies and gentlemen, please listen and listen to me very well. Listen and listen to me very well. Whenever we talk about development of an IFRS, and you guys must have seen IFRSs, or you will have to download. If you just go to IFRS, you will be able to download the IFRS book, and if possible, you can even print this for your own use. You will see that all these standards here have got some uniform presentation, all of them. And that presentation guideline is now what is provided in this conceptual framework. So conceptual framework is not part of IFRSs. Conceptual framework is something that is different. It's something that is different. So it's a different, like it's a manual. It's a manual. It's a manual. All right. Which in this case here has rules, which has policies that will be used here by the ISB board and ensures uniformity. Like, for example, you'll see every time you go to any IFRS, like they'll tell you like, first of all, we have recognition. How do you recognize that this is an asset? First of all, you start like with definitions, right? We have like, how do you recognize this in your financial statements, right? Measurement. We have even a section on derecognition. So to ensure that all the standards follow some kind of a similar framework, then we need this conceptual framework. This conceptual framework also, it's not ISB alone that will be making use of it. It's a global framework for accountants here. Remember, there are times an individual will go reading a particular IFRS and then they are not able to understand. Then this manual called the conceptual framework shall be able to complement what we do. Shall be able to complement, in this case here, what we do on this side. The IFRSs. Ladies and gentlemen, you know, there are areas where IFRS are lacking. Because like right now, they're really working on seriously the IFRS on the cryptocurrencies. Here's here that we are looking at, which may not be having any IFRS to guide us, then the conceptual framework can come in to help. How does it, if, for example, RCM today has got bitcoins, it's a cryptocurrency. So will this be an asset? Or in this case, is it a financial instrument? What is a Bitcoin? Because you can't say that it's a currency, for example. Rather, it's a virtual currency, yes. But now do we take this? Remember, Bitcoins, they fluctuate a lot. In terms of what? In terms of value. I can gain, I can lose. So do I take this as an asset? Do I take this as so if there are areas with gaps, then we have this conceptual framework, ladies and gentlemen, really coming in handy just to give us like the general application of these areas which do not have what here? IFRSs. Which don't have IFRSs. Yeah. Is also being used by training institutions here for purpose of teaching. All right. So this question of conceptual framework rarely misses. Rarely misses. I would want us straight away to just have a look at what we have here. A moment or a minute. The most important thing is for you to get like the way I've now mastered them. Eh? All right. I don't want you to cram. No cramming. No cramming. Just to have like you will be able to do what here. You will be able to really enjoy this. So this is which sitting. It's good we label the sittings. So this is August 2023 question 2. So you can see ladies and gentlemen here. Conceptual framework. The development, how we apply this standard, and how we interpret the financial reporting standards. It provides a coherent system of integrated objectives and the fundamentals that guide the preparation and the presentation of financial water statements. Importance of a conceptual framework for financial reporting. Importance of a conceptual framework for financial reporting. Number one, we have foundation for standards. It gives us the base. Consistency. Ensures consistency and coherence in development of accounting standards by providing a structured approach. I give you the structured approach to resolving issues. Guidance offers a basis for setting new standards and revising existing ones, ensuring they align with fundamental accounting principles. This framework enhances understandability, clarity, helps users and preparers of financial statements understand the rationale behind specific accounting treatments and financial reporting practices. Transparency promotes transparency by establishing a common understanding of key concepts and definitions used in financial reporting. Improves comparability. Because of the consistency, it facilitates comparability of financial statements over time and across different entities by providing a consistent set of water principles and definitions. Assists in benchmarking practices and outcomes, aiding users in comparing financial performance and position. Supports decision-making. Provides a framework that supports informed decision-making by investors, regulators, and other stakeholders by ensuring that financial reports are based on sound principles. Predictive value. Enhances the usefulness of financial reports in predicting future cash flows and assessing financial health. I hope you guys are able to hear me. Yeah, I'll be able to send them now. Guides judgment and interpretation. Resolution of issues assists preparers and auditors in resolving accounting issues not directly addressed by existing standards by providing a reference to fundamental concepts. Consistency in judgment promotes consistent application of accounting principles and judgment in the absence of a specific what-year guidance. Facilitates standard setting, framework for development, serves as a reference for the International Accounting Standards Board and other standard setting bodies in developing and revising what-year standards. Quality control helps ensure that new standards are grounded in a coherent set of principles, improving their quality and relevance. Educational value, learning tool, provides a foundation for educational programs and training in accounting and financial reporting, helping to build a solid understanding of accounting concepts among professionals. In summary, a conceptual framework is crucial for financial reporting as it provides the underlying principles that ensure financial statements are relevant, reliable, comparable, ultimately supporting effective financial decision-making and maintaining confidence in financial what-year in financial markets. So you see, like this question that they asked us here, ladies and gentlemen, they asked us here, if you see this August 2023 question 2C, they asked us here to provide reasons why it was important for the International Accounting Standards Board to develop a conceptual framework for financial reporting. Reasons why it was important for the International Accounting Standards Board to develop a conceptual framework for financial reporting. So in that case, ladies and gentlemen, then what will you be able to tell us? I mean, offhand, I'll be able to tell you so much. That this conceptual framework for financial reporting, ladies and gentlemen, describes what here? And we have been able to state that. What does it do here? What does it help us to do? The key things. The three key things. I would expect you guys to write here. I would expect you guys to write there. There are three key main things that this conceptual framework will help us. And I don't want to take this page down. I would want to see whether there is anybody who will be able to remember the key three areas where the conceptual framework is able to help us. Development of new standards, how they're being applied, and the interpretation, if you remember, and the interpretation, and interpretation. So then the main purposes, ladies and gentlemen, that I will always remember, the main purposes of this conceptual framework is to, number one, assist ISB in developing IFRS standards. In developing IFRS standards that are based on consistent concepts. It will assist all stakeholders to understand and interpret the IFRS standards. The framework, ladies and gentlemen, in this case here will help in applications of IFRSs. The standards are also important for learning purposes. I mean, accountants, all of us, in most cases, like where I work, ladies and gentlemen, we make reference a lot to this conceptual framework. They also assist auditors in forming an opinion. You will see always, like, for example, this particular, in this case here, reports of
EABL that I shared with you. At the very beginning there, you saw in this case here, for example, PwC saying that we used IFRS. And in this case here, financial reporting conceptual framework. All right, informing our opinion. So, ladies and gentlemen, once you are able to really think about that, then automatically you are at home. You are at home. Look at September 2021. September 2021, question number 5A. September 2021, question number 5A. September 2021, question number 5A. Once you get that question, could you kindly, ladies and gentlemen, in this case here mentioned there, let me save and send this. No, I'll just send it towards the end. Have you gotten it? Once you get it, ladies and gentlemen, please let me know. That is September 2021, question number 5A. They are very, very general. They are very, very, very general. We haven't gotten the question yet. Perhaps I should just type it here. September. There is a link that has got all these past papers. Yeah, Igamba has already sent it to the group. Sent it to the group. Thank you so much, Igamba. So I expect you guys to read it through. And then for my case, is simply to come and do what here? Summarize the question. Yeah. So basically in this question, they wanted us to give them the major limitations of this conceptual framework. And someone tell me one limitation. I want you guys to give me just one limitation. One limitation. We shall never ignore the theory areas. We shall never ignore the theory areas. Mm-hmm. I know of so many limitations here. Like, ladies and gentlemen, all of us appreciate the fact that our financial reporting is never fixed. Our financial reporting in this case here keeps on evolving. Things are changing. Like right now, we have automation on the way. Not actually on the way, but it's already with us here. So many things are required here to be changed. So financial reporting basically naturally is very, very dynamic. All right. And if you tell us that now we have a conceptual framework that was produced in 1902 and you expect it to be used always, no, that is going to lead to development of standards which will not really be able to live in these dynamic moments here. Ladies and gentlemen, also this conceptual framework has a lot of subjectivity. The interpretation in this case here is very, very subjective. If you give two accountants a conceptual framework, you tell them, in most cases, tell these guys here, help us interpret this. One person will tell you that I think that this is supposed to be done this way. Another person will tell you, I think it's supposed to be done this other way. So in most cases, they are not very, very objective. You know, objective, for example, as Angela was to ask you guys, what is 1 + 1? What is 1 + 1? All of you will shout back, it's 2. You know, that's now objective because we have different individuals. Like now, of course, some of you are seated in Turkana. We have others seated here in Kiambu. Others, as I speak here today, there must be somebody who is following this class from Cumberland, right? So then you're coming from different areas, but you're able to give me like the same response. So in some instances, ladies and gentlemen, conceptual framework is not, in this case here, objective, all right? It is prone to how the individual is making the judgments here. Subjectivity. Ladies and gentlemen, whenever they ask you about this conceptual framework limitation, they are also very complex. All right? There are things in this case you can fall even with a PhD in accounting and you will not be able to really comprehend. Ladies and gentlemen, in most cases, basically these conceptual frameworks are hot air. There is nobody who will come from nowhere to come and tell you, I mean, you have not used this conceptual framework. So there is no enforcement mechanism. There is no enforcement mechanism. Yeah, just like you've said, ladies and gentlemen, with the subjectivity, there will always be conflicting issues here. Yeah, between standards here. I mean, this standard says, this section of a conceptual framework says, handle something like this. Another section says, handle it in another way, like that. So I should have just shared this one right away. All right. So, ladies and gentlemen, now here we are. So it is September 2021. This conceptual framework, while it's essential, it has several limitations. Number one, we have here lack of specific guidance. The framework provides broad-based principles, but does not offer specific guidance for every possible accounting situation or transaction. So these are just general principles. Implementation issues. Preparers may face challenges. Preparers may face challenges. Yeah, my video is off because I realized that the internet is quite low. Yeah, our internet is broadband is quite low. That's why I had to switch off. So don't think that you have to put on your camera to see me. No. My camera is off. All right. So implementation preparers may face challenges applying the framework to complex or unique transactions where the principles are not directly applicable. Evolving nature of financial reporting, dynamic environment, financial reporting practices and business environments are continually evolving. They're continually changing, which can outpace the framework's update and relevance. The framework may not always address emerging issues or innovations in financial reporting promptly. Subjectivity and judgment. The framework relies on judgment and interpretation, which can lead to variability in how principles are applied. Different entities or individuals may interpret the framework differently, leading to inconsistencies in financial reporting. Complexity and ambiguity. Some of the concepts in the framework can be complex and open to varying interpretations, making it challenging for preparers to apply them consistently. Ambiguous or broad statements within the framework can lead to uncertainty and varied application in practice. No enforcement mechanism. The framework itself does not have enforcement mechanisms or authority to mandate compliance, which can impact its effectiveness in practice. Financial reporting standards and interpretation issued by ISB or other standard-setting bodies are necessary to provide more detailed guidance here. So you need supplementary standards. They can't work in isolation. Inadequate for some stakeholders. There are stakeholders who would want more. Limited scope. The framework may not fully address the needs of all the stakeholders, such as non-financial users or smaller entities with simpler reporting requirements. Relevance. Some stakeholders might find the broad principles less relevant or harder to apply to specific industry or jurisdictional contexts. Potential for conflicts. Conflicts may arise between the framework principles and the detailed requirements of specific standards, leading to practical difficulties in application. Updating standards, changes in standards or new interpretations might not always align seamlessly with the existing framework, causing potential inconsistencies. Dependence on judgment, subjectivity in application. The framework often requires significant judgment, which can lead to subjective decisions and potentially inconsistent financial reporting outcomes. Ladies and gentlemen, for our case, remember, these guys would want you to have like four key limitations. You don't have to cram all those ones. So in your case, is there somebody who can tell me 2 limitations here that they will always remember? 2 limitations that they will always remember. Somebody, please. Somebody, please. 2 limitations that they shall always remember. 2 limitations that they shall always remember. Limitations of this conceptual framework. The ones that you can never forget, 𝗕𝗂𝗁, Jerry, Monica, Faith. The ones that you can never forget. 2 limitations of the conceptual framework. Thank you very much, Ruth Sarem. Subjectivity and ambiguity. Lack of specific guidance. Lucy Ngora, very good. Complexity, that they are complicated. It can lead to different interpretation. This lady has quite a similar name to mine. Laura, very good. Different interpretation. Yeah, we have implementation challenges. No enforcement mechanism. And I love the way you guys are able to write this in your own words. Yeah, lack of enforcement mechanism. Complexity and lack specific guidance. That I will never forget, that they are complicated. They lack, in this case, specific guidance. The other one that I will never forget is the issue of subjectivity, which means that different organizations, different accountants, they end up interpreting this conceptual framework differently. Thank you so much. Thank you so much. And this has really been repeated. This has been repeated. If you look at May 2021, yeah, the environment, the financial statements are very dynamic, and that thing is normally left back there. Please look at May 2021, question number 5A. May 2021, question number 5A. So we have here May 2021, question number 5A. Question number 5A. May 2021, question number 5A. May 2021, question number 5A. Bonaigamba, once you share that, today you are our savior in this class. Once you share it, kindly let me know. Done. Thank you so much. Just go through that question and try giving me your answers kindly. Go through that question. I like always doing like 3 or 4 questions on this conceptual framework because I know how sensitive it is. Because I know how sensitive it is. Go through it and try giving me your answers. May 2021, question number 5. A. So there they are introducing something a bit different. The ISB conceptual framework for financial reporting sets out the concepts that underlie the preparation and presentation of financial statements for external users. Required. Discuss the aim of the conceptual framework, clearly stating how a conflict between it and a particular accounting standard could be resolved. So you see there, a keen student will first of all give us the aims. Aims are the purposes, what I was able to give you in this particular class. And then later on, you will be able to have another title where you mention like conflicts between this conceptual framework and a particular accounting standard. How will those conflicts in this case here be resolved? Remember, at the end of the day, ladies and gentlemen, IFRS is superior. Whenever there is a conflict between an IFRS and a conceptual framework, we shall trust the IFRS standard more. So as we wind up with this thing, I would want you guys to simply give me general answers. Don't get tired, ladies and gentlemen. So many people will not, people do not know how to read these things to understand. The questions, I mean. Mm-hmm. Mm-hmm. So I'll not handle the first part because the aim of this conceptual framework, we know that there is a goal in terms of them being used to produce IFRSs, applications, interpretations. That one, of course, all of us are very, very good. The only area that I would want us to look at is the conflict resolution. And I've seen that question being tested severally, and I can assure you, very few students are able to do what here to answer that question very well. There's a time they gave us that question for about 10 marks, and many ninjas were not able to do anything there. Many ninjas were not able to write anything. Many ninjas were not able to write anything there. So this is May 2021. Just want to label this for you. May 2021, question number 5A. May 2021, question number 5A. May 2021, question number 5A. Great. By assisting stakeholders to understand and interpret the standards, conflicts arising will be resolved. That ISB has got a role to assist, in this case, your stakeholders to understand and interpret the standards. Very good. Very good. Very good. Very good. Very good. But first of all, it will be very important for us to appreciate the hierarchy of authority. The hierarchy of authority. Primacy of standards. That IFRS standards take precedence over the conceptual framework. There is a conflict, the specific requirement of an IFRS standard will override the general principles of the conceptual framework. The framework as a guidance, the conceptual framework serves as a guide for developing and interpreting standards, but does not supersede the detailed requirements of existing IFRS standards. Now, from there, ladies and gentlemen, we have here the international board, which basically is charged with what we call interpretations. Whenever there is a conflict, then we shall be able to call upon IFRIC. You know, there are many bodies within ISB, many bodies within ISB. So we shall be able to call this particular like a committee. It's a committee within ISB to come and look at this conflict area. So IFRIC interpretations, the International Financial Reporting Interpretations Committee may be forced to issue interpretations to address the specific conflict or issues between conceptual framework and IFRS standard. Interpretations provide clarifications and additional guidance on how to apply standards in situations where conflicts or ambiguities arise. Just like, for example, how you have had in this case here where a judge gives in some court, gives a judgment, and even somebody goes to the Supreme Court to seek for interpretations of the judgment. So now here we are seeing that there is a conflict down here. Then we escalate the issue up. We take it back to the ISB to help us interpret because we're getting ambiguity. All right. Then, of course, there will be, whenever there are now conflicts and proper interpretation has been done, we shall call upon now the ISB to revise this standard if it's standard that is wrong. Of course, at times we are saying it is primacy, it is superior, but what if it is wrong? It has to be revised, or they have to revise, in this case, the conceptual framework. So revision to the standards update. The ISB may revise existing IFRS standards or issue new standards to align with or update the principles outlined in the conceptual framework. Addressing conflicts during the revision process, the IASB considers how to resolve conflict and ensure that the standards are consistent with the updated principles of the conceptual framework. So we have also the conceptual framework updates, framework revisions. ISB periodically reviews and updates the conceptual framework to address new issues, emerging practices, and inconsistencies with the existing standards. Application guidance, how do you apply? Specific IFRS standards often include application guidance or illustrative examples that help resolve conflicts and clarify how to apply the standards in practice. This guidance helps entities understand how to reconcile the principles of the conceptual framework with the detailed requirement of the standard. Let me see whether I can pull one standard to show you what exactly they mean here. Let me pull IFRS 17, insurance contracts. I want to see whether I can get a very nice PDF. But nowadays, here, to avoid those issues where we have potential conflicts, where in this case here there are ambiguities, where people can easily I can't seem to get it. So they'll give us, in this case here, little small examples that will be able to guide us, that will be able to guide us. How do we make applications? How do we make applications of this particular standard? So ladies and gentlemen, that is it. That is it. And now I would want to make some announcement, but first of all, I have to come here and share this document with you. And the other documents, I'm so sure we have had other documents, which fortunately already some students have, they can share with you. Then I want to make a very special announcement. Tell you how this time around we are going to study. Like last semester, we had a very good performance as well for this paper, AFR. But even this time around, we should be able to get 100%. So please confirm that you've been able to see it on the charts. Download it, and then 𝗙𝗲𝗄, if possible, please share it on our WhatsApp wall. Yeah, and then of course there must be this lady called Regina. I hope she's here. She should be able to share. She should be able to share the previous class notes on WhatsApp. All right. Now from there is something very important I would want to draw your attention to. Let me just open our LMS. At least we had an issue with the LMS, which has been resolved. We are trying to automate this process of adding students. All right. So then I don't know whether all of us have been able to get access to our LMS for AFR. For AFR. Yeah. So then I would want all of us, ladies and gentlemen, to go to this section. If you don't have it, I'll be able to give you access, because now the developer has been able to also now invite as teachers for respective groups to add. So I would want us, once you get access, go to this September-December morning 2024. All right. So in this case, you should be able to come and click on it, September morning. All right. So then what I would want us to do, ladies and gentlemen, is basically to follow this program the way it is. Yeah. No, not this September. Sorry. This is for this semester. I want the one of last semester. The one of last semester. Just a minute. I'll be able to rename this very well. Yeah. I've now seen them. I want to give you a very good shortcut of passing this paper very fast. So here, you'll be able to see like the May, August 2024 morning. May, August 2024 morning. I'll be able to find a way of renaming this. May, August 2024 morning. This one here. All right. So now these videos are the ones that we shall be working with. You see these videos here? They're the ones we shall be working with, following these videos here, one by one. And now I expect you, especially now this is where we are starting from, in our next class, ladies and gentlemen, we are starting with this topic number one. This one here. This video here. All right. This video here. We can just start with from the beginning, of course. Here I can see I'm reading the course outline, but there is no problem. You can start from here. Right? Of course, you'll be able to skip what you are able to see. And then now, the proper video that I would want us to start with, ladies and gentlemen, is this second video. The second video here. All right. So for our tomorrow's class, ladies and gentlemen, all of us should be able to find time and watch this video. This one that has got 1 hour, 18 minutes. All of us must watch this video before we come to our tomorrow's class. Because, ladies and gentlemen, now things are changing at CASNEP. You guys will be able to bear witness with me. We can't come to these particular sessions and then we start now making these definitions little by little. Of course, they are important. But to tell you the truth, the very best thing, ladies and gentlemen, is to ensure that we work with these videos so that now these live classes will be for tips and tricks. Like if this thing is asked by the examiner like this, how shall we be handling it? All right. So that you can do the donkey work using those videos, also like definitions, etc. When we come here, like now in my tomorrow's class, I'll be having my whiteboard. I'll be telling you that, this video that we have watched in this particular, the concept we have watched in this particular video, fine. In this other sitting, the examiner tweaked it like this. So let us solve in this case here, this other sitting like that. Now, why do I want my students this time around to work with videos? Please, this is something that I know is a game changer. We have used it before, and it's a very, very big game changer in the industry. Why do I want my students here to use video? Let me just open any video. Oh, I've not been sharing my screen. That's sad. I've not been sharing my screen. So remember, where have I sent you? It's May, August 2024. May, August 2024, the morning class, the one that I teach, the morning class. All right. And then you'll be able to see the top videos here. So for example, when I open this video, I don't know whether I shared very well. Let me just stop and then I share again. So if I come here and I share like this, and then I open out this one here, I have to share sound.
So topic number 1, remember you have done the last topic, finished. And you guys can get more information from the learning management system regarding the first, or the topic that we began with, that is topic number 6. But at least I've been able to finish it
now
as per what the examiner wants us to do. So today, I'm looking at topic number 1. Topic number 1.
Sorry.
So it is called.
Sorry. You see now here, what we'll do in the video, which you can't do in the normal class, what we'll do in the video, which you can't do in the normal class, you will come to these settings here, open the settings, and then you go to speed, this speed. So this speed, please, all my students, after you get used to, you can start with this 1.25, watching speed 1.25. But after you get used to my way, I like all my students watching videos at 1.5. So that this video, which is 1 hour, 18 minutes, you will take like 45 minutes to clear it and you will have understood everything there. Because we must learn how to save time. When you're not understanding, then you can be using it, you can be watching it at normal. But once you realize that this thing is flowing, this thing is very easy, this is a theoretical area, then you go to 1.5. Actually, there is no student of mine who works at normal. All students in this case here, I mean, if it's something that's a bit tough, then 1.25 is the lowest speed we accept. So it is either 1.25 or what year, or 1.5 or 1.5, and you will never go wrong. So once you click 1.5, you simply say what year? Play. You simply say play, and this thing plays now at a higher speed. So you can get to save time. That will really, really do what here? Work magic. And the way I would want us to be using this LMS, ladies and gentlemen, like over the weekends, we should be very intense with the LMS. All right. Like over this, like once, for example, we have done like, for example, today and tomorrow's lesson, then we'll say next week, we are going to do this particular Monday, Tuesday. We're going to do this particular topic. Then it will be very, very important for us to ensure that we watch videos for that topic, if possible, all of them. You guys must appoint a class representative who will be able to guide, not even discussions, but just to say that, is there somebody who has watched this video? Myself, I've watched this video. Somebody must be able to set the pace for us. All right, like there is this video is talking about a certain document. I can't see this document. I can't see this concept here. We need somebody, 1 or 2 people who will be able to set the pace for us. Once, ladies and gentlemen, we do that, trust you me, you guys will be very happy. Mwalimu will be very happy. I mean, everybody will be very happy, and we'll be able to pass. So what have we said? All of us must get to our LMS to ensure that we watch 1 video. All right, which you're going to use what year? In tomorrow. Just 2 months, 2 weeks, 2 exams here. A lot of time. With this LMS, Karanja, we are good to go. You'll be surprised. With this LMS, we are good to go. You will not fail. You should not panic at all. You will not fail. It's something you have done before. Even students come and join us in a month and they do what they pass. That's why I'm saying that we should use this LMS to ensure that we reach somewhere. Great. So that is it. And I would want us to stop there, ladies and gentlemen, to even give you time so that you can start watching that video. Thank you so much. We shall overcome. Have a great day. Bye.